Good evening, all. Ira Epstein with your SPDR ETF wrap-up for this Wednesday, the 26th of May, 2021, and probably around 7:10 p.m. or so that I'm putting this out. I want to remind you about tomorrow. At 12:30 tomorrow, I start a live webinar, but I'll open everything up for you at approximately 12:15 p.m. Central Time. That way you can get in, make sure everything is working. I'll turn off the voice. You can write questions, whatever you want to do, and that's what I need. I need from you to make this fast pace the markets you want me to cover. I'll cover SPDRs, ETFs, individual stocks. Bring me your symbols. Do not assume that I know the name of some company's symbol. All right? I'm a futures broker, but to me a chart is a chart, and it's not that hard to look at a chart and come up with these ideas. Now you're going to say, hey, I didn't receive an invite possibly. Well, you might not be in my mailing list. I did send them out. You don't need one. If you take a look here, you're going to see this icon. Click on it. Fill out the form. You'll get your invite, the instructions, how to get into the room. Starts at 12:15. You won't be able to join it probably by 12:30. It'll probably be full or very close to it. That's my guess, because we are filling up fast. So should be a lot of fun. I want it to be fast-paced. I am not going to record and put this away in any manner. So that part of it is not going to happen. Why? I want live attendance. This is about you make the time. Now at the end of it, I'm going to have a questionnaire also, asking you the best times, when you think we should hold these on a more regular basis. Might be even willing to do one at 8 o'clock at night, for example, when people are home. We could have fun with it. So for me, this is my life. I love trading, all this type of, I love running a brokerage company. I love putting out the trade recommendations. I love the market analysis. I'm lucky. I do what I enjoy, and I think it shows. All right, in the stock market, we're in a rotation rally, and the market's using a lot of energy to get itself up as this is going on. What finally happened? Okay, the Russell came alive. The NASDAQ, ARK came back. You can see that. GameStop, guess what happened? Reddit, there's posts galore on it about GameStop AMC. What do you think they're doing? They're running. You're bringing the retail guy back in for them, and you have a breakout, and you'll see that in GameStop in a minute here, and you've come back very nicely in ARK. It's not out of the woods, but it's made a move. In fact, when we take a look at ARK, you can see how you've got one of these rolling parts. Now, this could be a saucer cup, where you come up here and all of a sudden that handle lets go and you come the other way. I'm not saying it is, and I hate chart patterns to talk about them that way. Do I know them? I taught them for years, so I know them. But I find that working with the quantitative areas, in other words, when I'm working with math, the qualitative method of doing things, it's so much easier. So that's why I like to put on swing lines, higher lows, higher highs. Duh, how hard is it to understand? You have an uptrend. I had a trader write me today. He'd like to see me put this on other services. They can create the formula and put it up there. I don't stop them. I teach the formula. I don't keep it a secret. Tell them to do it. But I think you'll find it fascinating if they can write it. I did, and I'm no computer math wizard for software. I talked to somebody, explained it. I think we did it in 1 hour. So it's not that difficult. Everything else I do gets a little more difficult because I have my own way of filtering it, which I do with the 18-day average of closes. I have the 200, the 100. I have more moving averages I use in my paid subscriber videos. I only use Bollinger Bands, slow stochastics, the swing line, and window envelopes. It's not a difficult technique. I pick those because each one's a filter on the other one. Does that make sense to you? And within them, there's a hierarchy. The moment you start laying an MACD over a slow stochastic, then a fast stochastic over a slow stochastic, and this average instead of that one, do what you want. I did all that. I got 50 some odd years in this game, and I love charts. So I've tried those things. KISS, that's the name of the system. Keep it simple. You know what the last word is. All right. You're over the 18-day average in an uptrend. Next resistance point, 200-day average. And as I told you, you watch, this Bollinger Band's marching down, and it's going to get right into that 200-day average. That's your big resistance area if the market can get there. Support back through here at 107.16, and as I said, you'd have to break 100.03 to break this pattern. That would be very difficult to do right now. I'm not saying it can't happen, that would be difficult. But here, like a runner getting ready for the Olympics, I really hope that most of these people who are so smart, these Olympians, and I'm sure that they know how to keep themselves from getting sick, but it's going to be hot. They can't go out in public and all that. I don't know if these Olympics should go on, and I feel so bad because they train their whole life for this. This is, for many people, this 4-year period's it. And when that window's gone, it's not the same. 2 years, 4 years, whatever it is. It doesn't work out that way. I'm looking for the resistance right up here. The market seems to me like it's spending a lot of energy to not make a very dramatic move. But it has come back from roughly the 100 level to 111. So, you know, let's be honest, that's 11% move. Not bad. GameStop. Now, I call this a breakout. You've got the market in the top part of the quadrant here and here. So until you come back under this low, the most recent low, which is right there, I consider that a breakout to the upside. Do I ever tell a client to buy over a Bollinger Band? Slap me across the face if I do. I don't. I don't care if the market just keeps running. You don't. You're overbought as well. There's nothing bearish, but I think this is now your base, and the market has broken out to the upside. PAVE, I'm looking for nothing until they figure out what to do with infrastructure, but let's applaud. Somebody watched my show. Have I not been saying here, why are they not using the unspent COVID money for the infrastructure bill? And guess what the Republicans in the news today, I read this, are bringing up? They want to get up towards $1 trillion in spending using the unspent funds. Ta-da. Now, I am not saying that's close enough to President Biden's proposal to get it done, but we have all of July until we know if the Democrats are going to go it alone or if they can find a way with the Republicans to close in on the bill. Everybody wants infrastructure. That I do believe. Nobody wants increased taxation to pay for it, so they're trying to find other ways. And when I say nobody, Democrats do. Let the rich pay for it. The rich don't want to pay for it. And taxation generally doesn't help growth. Simple fact. So how do we do this without increasing the budget deficit? That's what the game is at this point. It's not about should we have infrastructure. It is about defining what is infrastructure. But you can see you're sort of stuck right here, and I expect you're going to just be in no man's land for a while. I may replace this chart with something else in the near term because that's what I expect. Apple, not a problem right here. All I was looking for, and you know it because you were with me here, I thought we'd get support at the lower Bollinger Band, the 200-day average, and then I expected the 18-day average up to the 100-day to be the resistance. I'm getting just what I expected. You haven't used up a lot of power. You're in an uptrend, but I don't think you're going anywhere. In the semiconductor ETF, well, like that athlete running, you're now running out of momentum. You're exhausting this. I don't expect much more. If you can get up to the upper Bollinger Band, I think the pros will be over it and calling it a day. So I'm looking for that to run out of some steam here. PODX, trying to keep the play going. The first thing we were looking at, we talked about it, was can we get back to the 18-day average when you got away from this oversold condition? Okay, that's a good thing. But is there going to be any legs to this move? Well, right now the trend is up, and I do have a target of up there. That could happen. I see support back at 1345. ESGU, trend is up, very overbought. Again, like an athlete running out of momentum and breath. 96.87, boy, if I saw that, if I were in that trade, I can tell you that I'd be looking at it as a big resistance area. XLE. What we have is a market with a lower low, well, actually a lower high there and higher low. We don't have anything, and we have an oversold condition. It's really stuck against the 18-day average. Wait for a better breakout pattern or a trend pattern, one thing. Emerging markets, you're very overbought. You're not even in the beginning stage of embedded. That could happen around the first stage. I'm looking for serious resistance at 81.15, about another 70 cents higher in the chart. Gold. It'll be interesting to see how gold responds because there's got to be a roll now in the futures markets. What do I mean by that? You do know this is based on the futures contracts. The June contract comes up for delivery, I think it's Friday. So if you're long, it's either Friday or next week. I'll look it up. You're going to get the pros coming out and moving to the August contract. So the nearby gets sold, the back end gets bought. It depends how it's balanced out in here, which I don't know. So we'll see. It should run into a bit of resistance up here as that takes place. In the gold miners, you're an embedded reading. You want to hang in there. If you see that red line getting back under 79, be careful. Probably a sign you're going to retreat, maybe make a run to wherever this 18-day average is. This has to stay here, and bull markets require constant new highs. It can't afford to get under 38.87, and then you're hoping it's going to come back. Be careful with that trade now. TLT, okay, you're still running. And this is a market that caught a lot of people. They thought interest rates would just keep marching higher right now. Instead, we're back in the 10-year note as an example in the 157 level, 158, back and forth right there. No 1.6 in front of it, and certainly not a 1.7, but the days of 0.65, 0.7, they're gone. You would have to have an outbreak of COVID, in my opinion, that we don't have a vaccine for, to have that happen again. That would just shake the world commodities. I'm not going to answer that right here. I want to finish this up with you. So let me just turn this off. Okay, so in FXE, still in an uptrend, but I think it's going to lose some of that. It just seems to be ready to back off a little bit. So as I put it all together, sorry about that ringing, I tried to stop it. I'm just looking for the markets to have a lot of problems with it. I think we're at the point where we're going to wave like this a little bit. We have a lot of data tomorrow. We have the GDP coming out and a host of sales. Pending home sales are coming out. There's an awful lot. I think 7 reports, 6 or 7 are coming out. I hope you watch the banking committee today in front of the Senate panel. They go in front of the House tomorrow. Oh my God. It was a fun party watching Elizabeth Warren go after what we call the draft fees, overdraft fees. And she went after the banks. I, for one, didn't know they made $4 billion on it. Of course, they're saying they gave back to 1 million people money and so on. They made $4 billion. I rarely agree with the woman, but I give her credit. That's an awful lot in this rough time, and a lot of people paying those fees. And then the bank attitude was, well, if you call us, why charge it in the first place? Give a waiver. Let them know I'm going to do it once. There was a better way, I think, to handle it instead of making $4 billion. But, you know, banks make money. That's what they're there for. They're not on every corner because they don't. I'm Ira Epstein. I hope to see you all at 12:15, 12:20 tomorrow. Take care.